Thank you everyone for joining our lunch and learn today about Advanced Revenue Management ARM. We are happy that everyone is here and that we are able to provide this to you guys. We are going to be kind of doing a quick overview of ARM, welcome and introductions to ARM, some of the key features and capabilities, and then Tish will bring it over into a live demo, and then we'll bring it back to some best practices and tips and open it up for questions. So I'm going to pass it over to you, Tish.
Fantastic. Thank you, Brooke. So welcome everybody today to our ARM Lunch and Learn. My name's Tish Bates and I'm the VP of Customer Success here at Luxent. And I've actually been working in the NetSuite ecosystem for about 12 years now. Before that was a controller for various public and private companies. So my background's actually in accounting. I've had a lot of experience with ARM. Specifically in like software services type companies. So definitely we'll be going through the capabilities and everything with ARM from start to finish. And hopefully this gives you a great overview of it. And at the end, we'll get to your questions. So Brooke, do you want to go ahead and move to the next slide? Okay. So ARM, its foundations are all based on ASC 606, the revenue recognition principles, right? To where you have those 5 key components of ASC 606, meaning you have to identify the contract, identify the obligations, determine your transaction price, allocate your revenue, and then recognize your revenue. So those are the 5 key steps in making sure that you properly recognize your revenue. Okay, so that's exactly what the ARM module does in NetSuite. Go ahead and move to the next slide, please. Okay, so NetSuite Advanced Revenue Modules, there's actually 2 versions of these. You have the Advanced Revenue Management Essentials. That's where product and services delivered over time. It's very basic. It's the most basic revenue recognition piece of the module. Okay, and then you have advanced revenue recognition or advanced revenue management, where you have the revenue allocation as well. So that's where your products and services are delivered over time, and there are multiple product components that make up the product or the order. And could it even have multiple transactions involved with that? Okay. So some familiarity, I wanted to kind of talk about the advanced revenue management terminology here, just to kind of get you familiar with it if you're not. So NetSuite basically arranges this in several ways, and we're going to go through all of the setup, and you'll see exactly how it works in a couple of process flow slides that we're going to go over. But revenue arrangements are used in NetSuite to basically set up, it's a non-posting transaction that's generated from that sales order or from an invoice or credit memo, and it represents your contract obligation. So it's basically creating that contract, okay? Your revenue element is also a non-posting line level detail of the revenue arrangement. So it's another layer, so to speak, of that contract that represents the items, products, and services that are under contract. Your revenue plans then are really the thing that shows you how your revenue is supposed to be recognized over the course of time. So on your revenue plan, which you'll see, you can see both your forecast plan and your actuals. Okay, so that's a really important part to be able to go in and review and see what's happening with each transaction. You have your revenue rules, which we'll talk about at the very beginning. This is important to set up because as part of your setup, and NetSuite comes with some default revenue rules, it basically defines how revenue is going to be recognized for each item. You can only have one revenue rule per item, and it defines that revenue method and source for how it looks at start and end dates, okay? And then lastly, there is the fair value component, and that's a list of records that define the fair value formulas basically for all of your items. Most of the time, your fair value is just going to be like your base price times the quantity. But I have seen other instances where that might not be the case. And you do have the ability to create your own custom fair value formulas in NetSuite. Okay.
Hey Tish, we have a quick question here from Kelly. They're not sure which version of ARM they have. Is that something that we can determine for them, or is there a place in NetSuite that they can look?
Yeah, I can. If you go to your billing information, and I'll show you where this is, so that you guys can go in and take a look, and I can go take a look for you as well and let you know. Okay. All right, so the NetSuite revenue management process flow is basically works like this, and this is just the revenue side. This doesn't start at the transaction. So when the transaction is created and approved, it has to be approved. It then creates that revenue arrangement, the revenue elements, and allocates the revenue, and also updates the revenue plan. Almost, I wouldn't say instantaneously, but it's pretty fast in how it does it. And we'll talk about timing and stuff when we get into the actual demo. And then at the end, you do the recognition and reclassification journal entries, which is another step of your month-end process that I'll walk you through. Okay. So key features, capabilities. Let's go into that. So this is the general process flow that you're going to follow. Okay. So in the transaction cycle, you would create and approve your transaction. Now, in your case, it's probably just going to be the sales order. In other cases, there is a module that a lot of software companies adopt called Suite Billing that could also have a subscription. And so the revenue arrangements could have both sales order and subscriptions basically attributed to them. Okay. Again, these have to be approved in order for that revenue arrangement to create. Okay. So you have that approved transaction, your revenue arrangement and element are created, and then revenue gets allocated based on that revenue arrangement and element. You'll have an event trigger, which is basically you determine when you're going to recognize revenue, whether it's on fulfillment or billing or based on a project, like if you have project progress. With Suite Billing, it can be over the course of the subscription, or it can be based on, some element of the revenue arrangement as well. Okay. Your revenue plan then gets created, and that's where you can really see, okay, what day am I recognizing revenue on, and how much revenue am I going to recognize? So it breaks it out by month for you. So you have your start and end date, typically like a 12-month period. And here's how much revenue you're going to recognize over the course of those 12 months. And there's also reporting that's going to show this to you, which we'll go through. Okay. So as part of your month-end process, in order to recognize revenue, you have to go through and create your revenue recognition journal entries and your revenue recognition reclassifications. Okay. So there's a month-end process that we'll walk through, and you'll see that in the demonstration. Once you do that, you can go through and take a look at your revenue recognition reporting. We're going to take a look at that as well. Okay. So NetSuite automatically creates these 4 accounts for you once you install ARM. Okay. So you'll always have your deferred revenue account, your deferred revenue clearing, unbilled revenue, and deferred expenses, the costs with the cost allocation feature enabled. If you don't have the deferred expenses, it's because you don't have the cost allocation feature enabled. Okay. So business use cases, and this is where it becomes really important for you guys to define your use cases. And this is something I usually walk my clients through because it's important that you capture all of them. I have seen companies that have had over 100 different use cases, all of which had different kinds of revenue recognition rules that need to be associated with them. So the reason we have you do your use cases and say, here's what we sell, here's how we sell it, and here's when we expect to recognize the revenue and how we expect that revenue to recognize out over the course of time. Okay. So it's really important for you to sit down and in an Excel document, just line it out. And I'll show you an example of that today so that you can see what that looks like, what that business use case might look like. Okay. So in this case, we talk about, software and support, software support and maintenance, typically performed over 1 year or 3 years. So you've got a good idea of when the term might be for this. You may also have a subscription that is evergreen. Okay. That's possible as well. You might actually pay up front for that subscription. So a lot of places, have an annual price on that they pay up front for those services, but then you have to recognize that revenue over the course of time because you're not delivering it until, each month passes basically. So you have to recognize that revenue, the recognition principle, recognize the revenue upon delivery of the product or service, right? You can also have professional services. So that could be something like implementation or development, something, training, any kind of professional service that you could possibly imagine on that as well. The product or service is delivered over time, and multiple products can make up that product order. So you might have, your license, you might have an upfront fee, you might have an implementation. There's all kinds of things that you can include in on this. So that's why we give you these examples to get your head, kind of thinking about what truly makes up our contract, right? Because that's how we need to define each item and how we need to set up those revenue recognition rules on those items to recognize the revenue. Okay. This is just talking about the revenue arrangement fields. There are some fields on there that we typically get a lot of questions like, what does this include? And transaction total, sum of the discounted sales amount fields, the total carve out of the revenue and how that's done, and the total revenue amount sum of the revenue. Okay, so we'll see all of those fields when we get to the revenue arrangement. So this is what happens, and this is also something that's very important for you to basically define in your use cases. When are we going to create those revenue plans, and when are we going to recognize? Is it going to be on revenue arrangement? Would it be when we're billing? Okay, so like when a sales order is billed, we're going to recognize the revenue at that point. Do we have the ability to fulfill, or do we want to fulfill? So for instance, if you did have like a license that you say, I fulfilled this and now I can recognize the revenue for it, you can do that. Or a product for that matter. Okay. Project progress. A lot of times when you're doing things in software like implementation, you want to recognize it over the course of completion. So percent complete, right? And then there's other sources too, custom events. For instance, when suite billing's enabled, or you have some sort of subscription management in your system, that might be when you want to recognize revenue. Okay. All right, so now Brooke is going to let me take the screen. And I'm going to take you into the good stuff. We're going to go into NetSuite. Okay. So you should be seeing my screen now. And what I've got here today is I've got a demo account that I'm showing you this in because it's set up, to basically run through and be able to demonstrate ARM. Right now, I am in what's known as the revenue manager role of this demo account. And I just want you to see this because I want you to see some of the things that you can get to when this is set up properly. Okay. So for instance, you can see your annual recurring revenue, right? Your monthly recurring revenue, your upsell ARR year to date, and your downsell. Okay. So these are all key metrics that basically NetSuite produces with this particular module or bundle, in addition to key performance indicators and your monthly revenue trend and et cetera. Like here's all your revenue arrangements. This can be customized to be whatever you want it to be. Okay. So what I'm going to do is I'm going to flip over to the administrator role so that we can go into all of the setup and all of the features and capabilities of ARM and take a look at them from start to finish. Okay. So here, where I'm going to start is basically showing you kind of how this is set up. And because you guys asked about how you can determine what you have, if you go into setup company and all the way down to the bottom to view billing information and go over to your add-on modules here. In this one, you can see that we have both Advanced Revenue Management Essentials and ARM, Advanced Revenue Management, the revenue allocation piece set up in this. So these are the two that determine. If you have just basic revenue, this would have a yes next to it. If you have both of them, both will have yes to it. And then if you had suite billing, which I know you guys don't, subscription billing is the option that you would have. Okay. So that's where you see what you have. Okay. In the setup of this, you would go into your enabled features. And you would go to the accounting tab and scroll down towards the bottom. And you'll see here the revenue accounting. Okay. And this is going to tell you whether or not you have both of those features enabled. Okay. Now, once we have that done, we're going to go to and take a look at some of the revenue recognition setup. So when you come into this and start setting up revenue recognition, some of the things that you need to look at are under the accounting menu. And you'll come down here and you'll see this revenue section. And you'll see all of these options. Okay. And I will be honest with you, most people don't use a lot of the options, but they are there if you need to. The ones that are important, number one, is to take a look at your revenue field mapping. And number two, take a look at your fair value formulas. Okay. So your revenue recognition field map basically tells you the system, tells NetSuite, when we have a transaction line, we want it to take a look at the term start and put that into the start date of the revenue recognition. Okay. Term end goes to the end date. And again, term start and end date go to the forecast date. You can actually set this up to be slightly different. There are other options, but most people, I would say 95 or better % of the implementations that I've done this is how they set up their revenue recognition field mapping. Okay, there's really not a great use case to deviate from this. Then your fair value formulas, this is what's going to set up and basically tell NetSuite when it's running your revenue recognition, how to determine the fair value of your transaction. Okay, so the base fair value times the quantity is typically what we see and use. And this is the base price for the most part of your item. So if you want the fair value to work in NetSuite, you would set this up and make sure, which by the way, this is a pretty standard formula that's in most accounts. If it's not in yours, we can put it in there. Okay. Very straightforward to set up. And the other side of this is if you did want to set up a new fair value formula, you could do so. So it's pretty easy to just name it and then put the formula in here using the fields and the conditional statements that you like in order to calculate that fair value. Okay, so that's what the fair value functionality is doing. Once that's set up, the next thing that you're going to want to go in and do is come over here to lists, accounting, and come down to your revenue recognition rules. Okay, now every account comes with standard revenue recognition rules. And these are basically some of the ones that you would have seen in your account. I think the first 4, it might be 5 now. The first 5 are actually just standard RevRec rules. This is what a majority of people use. The standard is really leading practice. Okay, if you have other revenue recognition rules that you want to set up, you do have the ability to set up other revenue recognition rules. So we're going to go over this real quickly. So basically, this default standard is just recognizing revenue straight line over the course of the term of the transaction. So start and end date is, January 1, 2024. End date is 12/31, 2025. We're going to recognize revenue across those 12 months. So the system would take and split the total of that item over the course of 12 months. And it's just straight line. Okay, recognition. You have these others as well that could be based on, you can see the differences of the RevRec start date source and end date source. This one is the revenue arrangement transaction date and the term. This one is the event date, right? So there's just slight differences in how this is set up, right? So this is a preference based on your company's standards and how they have stated they're going to recognize their revenue. Okay. There is also the ability to do proration. So you'll see here, straight line prorate first and last period. So let's say you have a contract that starts in the middle of the month and you don't want to recognize a full month worth of revenue for that month. You can put this one on there and it will recognize just that partial month and then split the remaining amount over the course of the rest of the 11 months, if that makes sense. So to set up a new revenue recognition rule, if you needed to do something different, you would just simply name this rule. You would choose the recognition method. So are we going to prorate it or not? For the most part, some people, very few, use exact days. But most of the time I see these two as being the most popular. Okay. And then if there was a period offset or start offset that you wanted to apply to this, you could. One of the things that I will also guide you to is to make sure that you have the ability to review the field level help, because nobody's ever going to remember all of this and the definitions of it probably until you've done it for a really long time. So this field level help actually tells you exactly what you need to know about these straight line by even periods, straight line prorate, first and last. It basically tells you exactly how that option is going to perform in your system. So I encourage you to review the field level help if you're not sure what that field means. Okay. So it will tell you specifically exactly what to fill in. Okay. There's also the ability to put in an initial amount. So sometimes I've seen where somebody wants to recognize half of the revenue up front and then the other 50% over the course of time. You can do that here. You can put in either a percent or a dollar amount. Okay. You would put the term in months. So if you think about it, you can say too, I want to recognize this over the course of, 24 months or 36 months or what have you. So if you needed to create items that you knew you were always going to sell like a 3-year contract, you could create a revenue recognition rule that would recognize over that 3 years. Okay, so this is again a company preference, like how do we define our use case? Okay. You're gonna choose your amount source. So is it event percent based on amount, quantity, or percent complete? So what that is and what that does is it actually, and this is one of the cool things that I like about this field level help, it tells you exactly when to use it. So you're going to use this option when with revenue plans created on revenue arrangement creation or on billing. You would use event percent based on quantity on plans created on fulfillment. And you would use event percent complete as an option when you're doing project progress. So this is like the percent complete on your projects, say an implementation. Okay. Then you're going to put the revenue recognition end date source. Is it the term? Is it the event date? Is it the source date? Etc. Those are the most popular ones that I typically see. Okay. And do we want to update remaining periods only if something if the end date changes, or update all periods? Okay. Usually everybody picks this one. Update remaining periods only. Okay. If you did need to reforecast, again, you could do usually remaining periods is the most popular option on that if you do choose that. Okay. This down here is only if you're doing a custom revenue recognition schedule where you might say on the first month, I want to recognize, 20%, next month, 30%, and the last month, 50%. I'm just making something up right now. Okay. So that's how you set up your revenue recognition rule. This has to be done next in the step, because the next thing you'll do is go to lists, accounting, and items, and we're going to take a look at how to set up your items. So I'm going to go into one of these existing items. I think this is one of the popular ones right here. I'm going to just edit this. Okay. So this is just a third-party software license. Okay. Now, what I will tell you is this is, again, a demo account. You can set up as much classification as you need to on these. And I encourage people to do that, because then you're not creating a bunch of revenue GL accounts. You're actually using your classification and segmentation to segment your revenue versus using your GL accounts. Okay. Which will lead to much more robust financial reporting. Okay. So this just has the standard class and location and department on it for your segmentation. I have seen people add things like product family, product line, product, just product group. I've seen 5 or 6 layers come in to this classification before with custom segmentation, and it still works very nicely, just depending on how you have to break everything out. Okay. So down here, this is typical item setup, right, across the bottom, except when you get over to your sales and pricing, one of the things that you'll notice is that your base price is filled out here. This is what your fair value calculation is going to pick up as that base price. If you have that one formula that I said, most everybody uses to calculate fair value. Okay. So this is what it would pick up. If you don't have this filled in because you do integrations or nothing but custom pricing for each item, that's okay. It's still going to pick up, we can still set something to say fair value should be this. And by the way, you can set fair value by item. So that fair value list could get very long. You can set up items with the fair value for each of the items that you set. So there's a couple of options with that. NetSuite's really flexible with that part. Over on the accounting subtab, we're going to see that you do have that deferred revenue account. Okay. So that's where NetSuite is going to throw your GL impact until you run revenue recognition. So basically, when you create that sales order and the revenue arrangement's created, you're going to have the GL impact hit that deferred revenue account. Once you recognize revenue, it will move the revenue that's sitting in the deferred revenue account into the income account based on that revenue recognition rule. Okay. The revenue recognition rule is set over here under revenue recognition and amortization. So basically here is where you see those rules. And this one is using just the default standard rule. Okay. You can also choose to hold revenue recognition on this. Okay. Or if you wanted to bypass revenue recognition, you could also set the item up to be what's called direct revenue posting. And when you check that box, which it has to be checked before a transaction is run on it, when you check this box, it bypasses the whole deferred revenue process and instantaneously recognizes revenue. Okay. So you do have that option as well. So say you have a one-time fee that's always on every order. And as soon as that order is fulfilled, you want to recognize the revenue, the direct revenue postings right there. Okay. So you'll set here where you want to create revenue plans on. Again, we're going to do that upon revenue creation or revenue arrangement creation, billing, fulfillment, or project progress. This is where you tell this item I want to recognize on revenue arrangement or create revenue plans on revenue arrangement. Okay. So this is how you set up the item, and the item is really critical. The item setup is critical to actually being able to recognize your revenue. This is what tells the system what it's supposed to do. All right. The next step in all of this is to then create your transaction. So one of the things that I'm going to do is I'm actually going to go over to one of the reports and show you how to find transactions and where they are in their revenue recognition creation. So if you come down into reports and go to this revenue option, you're going to see a bunch of revenue recognition reports here. And we'll go through some more of these after we run through the revenue recognition process. But I'm going to open up this billing and revenue summary report because this is one of my favorite reports when it comes to revenue recognition. It basically tells me that I have all of these transactions out here. Here's the source date of those transactions. Here's the document number. Here's what type of document it is. Here's the revenue arrangement associated with it. And then you can see it's got the amount of the transaction, the total amount that's been billed, the total amount that's been planned, the total amount that's been recognized, and what's still sitting in deferred. Okay, so I'm going to pick a couple of these to kind of show you and demonstrate to you what's going on with them. Okay, so I'm going to start with lacrosse. No, I'm sorry. Go up one. I'm going to do Murphy Incorporated. Let's do that one. So Murphy Incorporated, this sales order has been billed. Okay. And you can see down here, there's just one item. Okay. Let me pick another one too, because I know there's one up here that has quite a bit. Let's get to a more recent one. Another option that you have too is you can take a look at the related records on the items and see what invoices are out here. So I'm going to take a look at this one. And we're going to go to related records, which doesn't show me anything on the invoice. Let's go to the sales order. Helps if I pick one with a revenue arrangement. Let's try that. There we go. So under related records, you're going to see this revenue arrangement here. Okay. So what happens is you go out, you create your sales order, you approve your sales order. You can see this one's pending fulfillment still, but you approve your sales order. And when you do that, this revenue arrangement is created. Okay. So when we come down here, we can take a look at this revenue arrangement, and there's multiple components to these revenue arrangements. Okay. So this is a third-party software support contract. All right. This is your revenue element. So again, revenue arrangement, revenue element. Here's your allocation detail. Okay. You can see your base fair value here and the calculated fair value amount. Okay. Under your revenue element, you're going to see that item. You're going to see that sales amount, the quantity, your base fair value, calculated fair value. Okay. And all of the information regarding the revenue recognition rule. So what do I expect it to recognize as? Okay. Here's your deferral accounts, your rev rec account, right? So all of this information on the revenue arrangement is extremely valuable. Okay. Once we go through and we fulfill this and actually see the entire process at work, right? So let's fulfill this very quickly. Everything looks good. We're going to save this. Demo account moves slow. Okay. And now we can bill it. All right. Let me go through the update. There we go. Hit save. Okay. Now, let's go back to our sales order. I'm going to get back to that revenue. You'll see on that sales order, all of the information attributed to that. If we go to that revenue arrangement now and update revenue plans, we should be able to see that revenue plan. Yeah, it looks like right there. So no errors. All right. So let's go back. Let's refresh this. Look at the revenue summary. So basically, you'll see the revenue amount and the amount billed. Now, another example of this would be when you have that amount that is basically going for like a subscription, where it recognizes over the course of time. Okay. So those instances, you would see that plan laid out to where you can see start and end dates and see each month actually recognizing over the course of time. Okay. Let's see here. Let's find another one. Let's view this. Okay. All right. On this one, let's look at that revenue arrangement. So this one has a revenue plan set on it. Okay. If you look at this revenue plan, it's going to tell you the revenue start date, the revenue end date, the plan total. It shows that it has not started because we haven't recognized revenue yet. Okay. So it has $1,200 that's supposed to recognize. All right. So part of what you do after your transaction cycle goes all the way through, each month, you're going to actually go into transactions, financial, and you can first go to this update revenue arrangements and recognition plans. It's basically what we did in the revenue arrangement piece as well, with that button. That's the first step. So what I always tell everybody to do is to go in order, update revenue arrangements, because you don't know. There's a couple of things that you can do to set this up automatically. When you set it up automatically in your settings, it runs every 3 hours. That's by design. You cannot change it for the automatic. Okay. NetSuite controls that in their system. However, in update revenue you can arrangements, you can also do it manually. If you choose to do it manually, this is where you come to do it. And when you finish closing out your month on a monthly basis and all of your revenue is finally, your invoices are run, everything's finally booked, and you close AR, or you're getting ready to close AR, you're going to want to go in and update revenue arrangements, because you might be, even if you have the automated setting, you might be within that 3-hour window. You just want to make sure you capture everything. So you go out here, you update revenue arrangements, let it run, and then you're going to update revenue plans and let that run. Okay. And you should see 0 errors coming from that. Okay. So just note that that needs to be done first. Now, the next step would be to come to financial, schedule revenue recognition journal entries. And I always tell people to go out and take a look at what is setting out there. So if you go to run now, when you come in, it's going to go to the oldest open period. Okay. So we would want to bring this up and probably do something more along the lines of September of 2024. You can choose to include prior periods. So if I wanted to run revenue recognition for literally everything that is in here that hasn't been recognized before now, I could do that. I could come over here and include prior periods. Okay. I'm going to choose my journal entry date, which 9/30 is fine. You always usually choose the end of the month. And I can also click this to go ahead and approve the journal entry. Okay. That way you don't have to go back in and approve it later on. Okay. There's no records to run on September. So let's find a month that does have some. Let's see if April does. Nope. Right. Apparently we've read quite a bit. Well, let's check this. There we go. Okay, so if I include prior periods, then it allows me to go through and take a look at all the revenue arrangements sitting out there that don't have revenue recognition recognized. Looks like really old demo account, has a lot of transactions from prior periods. Okay, I'm not going to run all of them, but I will run some of them so you can see it work. Okay. Let's take a look based on plan period, most recent. Okay, so I'm just going to run for these top three. You can choose to mark all. Okay. It is also based on subsidiary. So if you have multiple subsidiaries, you have to choose a subsidiary that you're actually wanting to run this in. That's an important thing as well. You can choose to only run certain transaction types or for certain customers. You can choose to select individual schedules. If you don't have this checked, if you undo this, it's going to tell me it's just going to run for literally everything that's sitting out there. Okay. So that's why I'm choosing to select individual schedules. I'm going to make sure that I approve just those top three, and other filter devices over here as well. Once I do that, I'm going to hit create journal entries, and it takes you to this screen and it shows you how it's doing. So you can see this one's in progress. Okay, it's complete, 0 errors. So once that happens, I can go to this. It's going to show me that journal entry that it created, and I can go check it out. So it created my journal entry for August 31st, 2024. And any journal entry you see that says RevRec source and RevRec destination, that is a RevRec journal entry. You cannot change that line description on these. It's locked. So I've had a lot of people ask me that. This is also a great way to find all of your revenue recognition entries in a saved search. So it shows you what it recognized and how it moved it from deferred to the correct GL revenue account. Okay. So that's the first step in your month-end transactions. The next step is to come over here and go to schedule reclassification journal entries, and same process. You're going to hit run now. So this is where you would choose, again, same process. If we just go to that, we're going to approve this, and you're not going to see anything down here. This is a little bit different, but you would just go ahead and create that journal entry. And if there was anything to reclassify, it would do so. Okay. So that's the reclassification process. Not everybody needs reclassification, but it is there if you choose to use it. Once you're done at the end of the month recognizing your revenue and running through that revenue recognition process, you can go to your reports. And so let's take a look at each one of those. I'm going to close some of these out so we don't have quite so much open. And I'm going to go to revenue. We'll look at deferred revenue by customer, by item. You can also see the difference. This is the revenue by customer and item, your waterfall, your deferred revenue waterfall, your revenue recognition forecast, your billing and revenue summary. Again, my favorite one. If you did have any revenue reclassification, I don't think there's any in here, so we won't visit those. And then your roll forward. Okay. So deferred revenue by customer is just showing you what's sitting in each customer's deferred revenue account. Okay. You can customize and pull in other things in here. Like if you wanted to pull the items in by customer under this, you could certainly do that as well, just by hitting customize. And let's see, going to, let's just pull it. Okay. And we'll just do display name. And I'm going to group it with previous so that you can see how it kind of gives you that roll up. So if I look at it now, you'll see how it breaks down by customer and by item, what's sitting in their deferred revenue account to recognize. Okay. Same thing holds true for the item. You can see all of the deferred revenue for each item. You could technically pull the customer in here and see who's got what open as well. Okay. Your revenue by customer for this time frame. Revenue by item isn't really pulling anything right now because of the filters that we have in here. Let's go out to X23. There you go. And all of these are drillable, just like every other report. You can see these are the journal entries, the revenue recognition journal entries. You've got your deferred revenue waterfall summary. So this is basically showing you that deferred revenue account and the revenue account. the balance of the deferred revenue, any unplanned deferred revenue, and then the amounts based on the period that you're looking at here. Okay. The revenue recognition forecast is going to show you what's sitting out there to be done for the upcoming time period that you're looking at. So if you look out into the future, you can see whatever's sitting out there for next month. Okay. And then this, again, my favorite, because it tells me the total amount that I've billed, the planned, the amount recognized, and the amount deferred. The reason I like this is because it tells me if I missed something. Okay. Did I miss recognition on something, or is something not set up correctly, or, do I need to go dive down into something, right? So if I'm expecting all of this to be recognized, because it's in the past and it's still showing that there's an amount deferred, well, then I probably need to go back and find these and get them recognized, or figure out why I didn't recognize it in the first place and then clear it up. Okay. So this is a really valuable report. This is the one that most people use and like the best. And then you have your deferred revenue roll forward summary as well. Okay. Another valuable report. All right, I'm going to stop sharing. We're going to come back into the presentation. Brooke, can you pop that up for me? Where we were
Yes,
at?
just give me, yep, just 1 second here.
Okay. All right, best practices and tips. So this is where I have a spreadsheet that I have put together that basically walks you through creating those use cases. So each tab is a different use case. One of the things that you need to do is to define your use cases and lay it out in such a way that you would take basically an order that you get and put each one of your lines, each one of your items, the quantity, the rate, the sales amount, any discounts, things like that. Determine your base fair value, what you would expect it to be, and your calculated fair value, what you would expect that to be. And then run through like the billing frequency, the billing term, the revenue recognition rule, and how you would expect that to recognize over the course of time for each item. Okay. So that's really important to do. And that's something that I can definitely help you define those use cases out so that we know that we have revenue recognition rules set up and working the way that they're supposed to. And we know that your revenue is going to recognize properly. It's very important to test the system and make sure that everything's going to work as you expect it to. Okay. Next slide. Okay. Revenue rules. This is a really helpful slide. Okay. So this is how to set up those revenue rules. This is leading practice. So subscriptions, support, maintenance, they're ratable over the term. They have line level start and end dates, and they're usually revenue plans are created on revenue arrangement creation. Okay. Perpetual license, they are recognized usually on fulfillment. They have a start and end date based on event date. Revenue plans are created on fulfillment. And the rule amount source is event percent on quantity. Okay. Delivery, so acceptance of goods, go live, activation, things like that. Those are recognized again on fulfillment. They have a start and end date based on event date, and revenue plans are created on fulfillment. The rule amount source is event percent on quantity because it's on fulfillment again. And then time and material services, where you're billing somebody like hourly. Okay. or travel or anything like that, that's going to be recognized based on the invoice amount, start and end date, based on event date, and you're going to create plans on billing. Okay. Next slide. So this is another just little leading practice tip and trick that I like to give people. If it's a subscription, your trigger is going to be the start and end date. If there is no end date, by the way, if it's evergreen, there is no end date. Okay. The suite billing actually deals with evergreen contracts along with some third parties out there. They deal with evergreen contracts. So when you market evergreen, it doesn't expect an end date. It looks for a start date. Okay. License, fulfillment or invoice, hardware, fulfillment or invoice, percent complete is project progress, and training or classes is usually fulfillment or invoice. Okay. So this is the process to make sure that you run through at the end of every month to properly recognize your revenue. You're going to want to confirm that all orders are in for the end of the month and are entered and approved. You have to make sure that they are also approved. Remember, nothing happens until it's approved. Confirm that all invoicing for every month, for the month, has been entered and also approved. Again, has to be approved. You're going to either manually or automatically, which if it's automatic, again, every 3 hours, trigger the creation or update of revenue arrangements and plans. You're going to validate that there are no errors on those revenue arrangements and plans. Example would be a missing start or end date. And then you're going to review and update any revenue plans on hold. Okay. You want to make sure you can put revenue plans on hold. Say there's an issue with the customer's account or something like that. You haven't delivered anything at that point. You can't recognize the revenue. You can put the revenue on hold. Okay. Once all of that's done, you're going to create your revenue recognition journal entries through that process that I showed you. And you're also going to create your revenue reclassification journal entries. Then I ran you through these reports. These are the reports that are sitting out there. All of them can be customized to pull in additional information. Like if you want to see, the classes or things like that in there. However, your segmentation, however you're segmenting it. You can certainly pull those in and add them into those reports. Okay. And that's it. Questions?
On the billing and revenue summary report, is there a way to close the SOs?
Yes, you can. Let me see if I can find one here that's sitting in open. Let's go to one of these. So if you just go in to edit the sales order, this one's already been billed, so this might not be a great example, but you can come down here and you see where it says closed. You can actually just click that. And once you click closed on each one of these lines, and usually there's a button up here at the top. If it wasn't already billed, it probably would be a button. But basically you can just hit close and save it, and then that'll close that particular one out.
Why don't they auto close?
Once they're considered billed and complete, you fulfilled them and billed them, they're complete. You don't have to close them.
If there's not anything else, we will close out our presentation here today. Thank you everyone for joining.